The following is a presentation of TFNN.
'em. Let's go to Ilka in Boston. Ilka, thanks for calling. Thanks for holding.
How are you?
I'm doing wonderful.
Steve, seriously, you guys are unbelievable. You are doing wonders for all the traders.
Well, thanks. We appreciate that.
The Trader's Edge. Now, Steve Rhodes.
Good morning from TFNN. Welcome to the May 5th Marvelous Monday Cinco de Mayo edition of today's opening bell on the Trader's Edge. I'm your host, Steve Rhodes, author of Mastering Probability, the daily newsletter service that is the intelligence for creating financial freedom. Hope everybody out there had a great weekend, fantastic weekend. I know I did. I wasn't with you on Friday. Was driving up to my daughter's graduation ceremony up at Florida State University. A terrific weekend up there. Had a great time, and life moves on. So, anyway, thanks so much for joining us here. The best way to start our day, it's always to have clear outcomes. That's why each morning I let you know that my outcome is to teach you how to master the tools for trading, and that includes the tools of the mind. You see, trading and investing, really much like life, it's really all about strategy. In the next couple of hours, we're going to look at different strategies out there. We'll take a look at price relative strength divergent patterns. We'll look at A to B equals CD. We'll look at Gartley buy and sell patterns. We'll use these tactics and many others to project where price may be headed to. In fact, what we'll also do is we'll take a look at strategy. You see, tactics is only one area, is only one function. You've got to have strategy, because tactics without strategy, it's a recipe for failure. And in my book, that's not an option for us. So the foundation of any strategy, it's a strong mind. So let's go take a look at one of our tools out here, the tool that I call ending procrastination. You know, perseverance is about as important as gasoline is to driving a car. Sure, there's going to be times where we feel like we're spinning our wheels, but what I have found is that we always get out of the rut with genuine perseverance. Yeah, I know I said I was going to talk about procrastination. But you see, we've got to understand what perseverance is all about, because without it, we won't even be able to start our engine. And that means the opposite of perseverance is procrastination. Perseverance means what? Never quit. Procrastinate usually means we never get started, or if we do something, we never finish. Hey, my daughter was not procrastinating. She got out of college this weekend out here. So now the procrastination is get a job, right? So what do you think is the main cause for procrastination? See, I had this conversation this weekend. That's why it's fresh in my mind. Well, it starts with the letter P as well. And it's the lowest standard that one can set for themselves. It's called perfection. That's right, perfection, which means that everything has to be just right before a procrastinator can start their task. Now, I'm not using the word procrastinator as a negative thing out there. It's just a matter of what is it that doesn't get us off the schneid, doesn't get us off the dime. We're waiting for things to be just right, like we're the three little bears out there. We're going to talk about the three little bears. The Dow futures are trading off about 85 points right now. Here's the deal. Don't strive for perfection. Instead, strive to be outstanding. Strive to be extraordinary. These are standards worth achieving. And when you change your mindset to that, you'll get out of any rut that you are in life. You'll begin to move forward. You'll get that inertia going. That's the law of inertia, where you just start moving forward. That's all that you need to get going. I say change your standards from perfection to outstanding, and guess what? You'll change your life. Well, it is Marvelous Monday. This is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Let's get things kicked off here. Right now, we've got Dow futures are trading up 87 points, trading out at 16,359. S&P futures down 10 points at 1864. NASDAQ futures off 25 points right now, leading the charge on the way down. They're trading out at 35.53. King dollar back up 5 pennies, trading out at 79.51. Not a ton of movement inside the currency market, well, except for the euro, Japanese yen. We'll go take a look at that currency pair. Goldilocks on the move this morning. That's up $11 out here, trading out at $13.13, and a bit of change. Silver up 13 cents. She's trading out at $19.68. Light sweet crude back 11 pennies right now, trade out at $99.65. Our call-in number is 877-927-6648. Happy to field your call, answer whatever question I can. If we take a quick peek around the globe out here, we've got the DAX is trading off 130 points right now, down 1 3/10% out there. Over in Asia last night, we had the Nikkei off 27 points, Hang Seng down 284. It closed out at 21,976, and the Shanghai unchanged, really up 1 point out there. So where do we begin? We got a little bit of pressure going on inside the markets out here. You know, I've got to start with my favorite currency pair and yours out here, see if this thing is falling apart here just yet. And so let's go check in on the Euro-Japanese yen. Euro-Japanese yen, if we take a look at, so there's a number of things out here. No, it's not falling apart here just yet. In fact, it's up against a one potential support area. That's the support level coming off of the lows here on November 7th. If you are watching us on TigerTV, you can see the chart here for the Euro-Japanese yen. If you're listening on the radio or your mobile device at TFNN.MOBI, thanks so much for doing that. Let's take a look at that low from November 7th inside the Euro-Japanese yen. That's the swing point low. That level is 131.20 out there. The next low, the next swing point you're trading into is February the 4th out here, 136.22. You can see that price here, that's the red diagonal line going across my screen out here. Price right now, it's trading at a 141.49. It is into that level. If this level holds, and it's been trading inside a narrow banded range, keeps getting narrower and narrower. I suspect that this level is going to hold out here, and then we'll see a bit of a bounce in the marketplace. Whether that bounce takes place today, can't say. We'll go take a look at some charts out here. But right now, this currency pair is not falling apart. That actually bodes poorly for the three little bears out there, and good for the bulls. Where's the next level of support if, in fact, this trend line gets broken? Well, that'll go ahead and send price back to the original breakout. Not original breakout, but recent breakout. It seems like so long ago because it was March the 6th, 2014. That price level 140.38 or so out there. So we're quite a ways from that level. So the currency pair is not at all confirming what it is that we see going on inside of the markets out here. Now let's go take a look at what's going on an intraday basis. Let's take a look at a 30-minute chart out here. First thing I'm going to do is put up the Rhodes momentum indicators, see if we've got any price relative strength divergence occurring out here. Well, because it's a 30-minute session, let me get my crosshair going out here. Crosshair coming into this 9:30 session. Looks like this ought to, well, I need to just change one thing out here. Give me a moment here. I'm going to, maybe there's one element that I need to change on the setting here. So I can put that off to the side and go in there because it's probably set to wait for the price bar to close out there. So let me, I did. It had set the price bar close. Let me go ahead and change that out here. Just one of the trading strategies. There we go. Okay, so now we'll pull it over here. So we can see that's taking place here right now. Now, intraday chart, no doubt. We're taking a look at a 30-minute chart out here. But one of the first things I'm looking at is, hey, is this move real? It may or may not be. We may see a continued move lower out here. Well, it's been real most certainly since about, 11 o'clock in the morning. This was on Friday out here. Well, let's take a look at where we're at right now. We're seeing the Dow. This is what we're looking at here. We're seeing the Dow make a lower low, doing it on slightly less relative strength. I say slightly less because as the hounds are released from the gates out here, and I didn't get a chance to see the Kentucky Derby, so didn't even get a chance to really see a replay of it. You know, I always say that when you're present, be present. So I was present all weekend with all the activities and festivities up in Tallahassee. And, of course, that was down in Gainesville. I've got another daughter that's going to college out there, so one of them out the door, so to speak. In any event here, right now we are seeing the Dow on the 30-minute chart form a price relative strength divergent pattern. We'll see if we get a bearish or bullish candle here between the 9:30 and 10 o'clock session out here. And that would then potentially be one element of confirming a bit of a low out here, at least for the intra-period. So that's on the Dow. That's been on the strong index. Let's go take a look here at the NASDAQ. Let's go see what the NASDAQ is doing, see if it too is forming a price relative strength divergent pattern out here. And it is not. So in the case, what we can see here, the swing point that I'm looking at is 5:30 this morning. You get a 30-minute chart that we're looking at inside of the NASDAQ out here. It made a low. Where's that price point out here? The low that it made at that time was 35.59. Relative strength reading on a 14-period basis. Looks like that was at about, I've got to have pop up a different tool in order to take a look at that. There we go. It's popped up on a different screen here. That reading was right at 29.16. Right now you can see you're at 26.36. So in the case of the NASDAQ futures, it's pushing lower with more weakness out there. So the weak hands here, the NASDAQ is not giving you any kind of a reversal signal on its 30-minute chart out here. Let's go take a look at the S&P futures. Let's go take a look at the June contract here for the ES Mini. Let's go see what it is doing. It's also pushing lower, but it looks to be doing it very close to, let's see, the session again also at 5:30 this morning. Low out there, 1865 and a quarter. Relative strength reading there was down at 27.78. You're at 25.71 right now, so it is pushing lower also. So, and it's also broken a little hammer candle that took place here or formed, I should say, at 7:30 this morning. So what do we know? Well, what we do know is that things are moving into a oversold condition on a 30-minute basis out here. Let's go take a look at, let's change this to a 120-minute time frame. Let's go see what's going on the 120-minute time frame charts out here. We'll take a look. Let me add a few more days in here with regard to data, and let's go take a look and see if we got, we're not right down at the lower threshold of that oversold territory. We're pretty close. The reading here is about 31.51, but this is the 120-minute charts have definitely changed into the sell mode. You can see that here on my screen, just using that little color-coded system. Red is telling you that the sellers have got control of the market. You can see that really took place at about, coming into the close, quite frankly, on Friday out here on the 5:15 time frame. So sellers still in control of the market. It's all a matter of perspective. We'll take a look at I want to take a look at the Dow here, but we'll take a look at the daily charts. If we don't do it here before the first break, we still got another minute or so. If we don't do it before the first break, we'll come back and we'll take a look at that. We'll first take a look at Goldilocks and silver, though, because they are moving higher this morning. We'll go see what they are running into. So inside of the Dow here at about the time period of 12 noon on Friday, making a price relative strength divergent pattern. That means it was making a higher high. It was doing it with less relative strength, and it gave a nice big bearish engulfing candle at 12 noon. You saw some follow through during that. This is on the strong index out here, the Dow. Well, one of the strong indices out here. Certainly stronger than the NASDAQ, certainly stronger than the Russell 2000, and you did have follow-through at the 2 o'clock session inside the market. So the 120-minute chart, it's actually in the overbought or oversold territory. But no, as the top made a nice price relative strength divergent pattern, the bottom here as we speak right now, that has not occurred. Last time we saw a nice bottoming impact. That's why these patterns are so cool out here. We'll take a look at the Dow at 2 o'clock in the afternoon. That was on April the 28th out here. Nice big wide-ranging bar that came in coming into the close, and we saw price obviously move up into the highs until there was a price relative strength divergence at 12 o'clock noon on Friday. Right now, Dow futures off 83, S&P down 9. We'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Not much change here in the futures market. Earlier I was talking about the Euro-Japanese yen. If you're watching us on Tiger TV, you get to see a cool, what I think is a cool chart. It's a correlation chart out here. See the Euro-Japanese yen currency pair. It tracks the U.S. market better than any other currency pair that is out there. Has been for several years. And what you want to be paying attention to is when you see divergent patterns, because these divergent patterns, they really tell you, they give you great clues about the market. Now, the reason is because the Euro-Japanese yen is really a great liquidity gauge. I just refer to this as really it's a great currency pair for trading good patterns out there, but it's a great, terrific liquidity gauge as to what is going on inside the markets. Now, the reason why I say that is because when liquidity is getting low, when the Euro-Japanese yen, in this case here, is moving down, that's where you also start to see our stock markets move down. They really move in tandem. When the Euro-Japanese yen leads the market, meaning in advance of the markets turning lower, the Euro-Japanese yen is moving lower, as it did back here. Let's say we'll take this back here in the recent time period. Where can we take a look at it? Right back here, I guess most recent time period in the early part of January in 2014. We had the top part of my chart is the ES Mini out here. Yeah, I've got the ES Mini as the top portion of the chart. You can see here, price was moving slightly higher. The Euro-Japanese yen was moving lower. That was a little nuance there that was leading to some type. Now, you got to use other tools. This is just a indicator here to be able to help us understand when things diverge, they're going to typically resolve themselves. I say typically because I have found an instance where it did not move in the direction of the currency pair. But other than that one instance, really you want to be paying attention to this. Now, as we speak about the most recent move off of the lows here, the April 15th low was the Euro-Japanese yen that was really signaling to us that the move lower in the market was not real. Now, we made a significant low. We made, I think, around the April 15th time frame, 14th, depending on which index you're looking at, whether it's futures contract index, what have you. But the Euro-Japanese yen was not making a lower low out there. And that really, because if you go back and you take a look at the charts and take a look at the number of times where this has provided us with that type of information out here, I mean, it's like 99.9% of the time it is helpful. Now, what it doesn't do, what it can't do, it doesn't tell you what the extent of a move lower or higher is out here, just simply that the move that is undergoing at the present time is not real, and you start to look for other indications. Maybe it's a price relative strength, maybe it's a test of a swing point, maybe it's wave D, E, F, G in the Chapman wave. Maybe it's a Fibonacci expansion. Maybe it's a Gartley buy or sell pattern. Those are all different tactics out there, but those are tactics, and then you want to go ahead and plan the strategy. Now, at the present time here, if I go ahead and I blow this up on the screen, not really a ton of information being provided to us on this correlation chart. And that's the reason why I go back and I take a look at this this chart out here of the currency pair, and take a look and just see what it is doing on its own. And what it is doing on its own here, as I say, running into a support level. That is the red diagonal line in the market. And so really, to a certain extent, it's providing, suggesting to us a buying opportunity. Yeah, futures are trading lower. I'm here to tell you that the sky may continue to fall today, but right now this currency pair is saying that it is really not the case out here. Now, I changed my opinion. I really changed my opinion inside that statement if we see a close below March 6th out here inside this currency pair, because what we have here, what is represented here, is a consolidation pattern. Consolidation pattern very much like what we see inside the futures contract. If we go take a look at the strong hands inside the futures market, if we take a look at the Dow, it's been consolidating since February the 14th out here. The low out there in the 15,911 range out here. So the top of the consolidation where we know that the bears are flanked. That's what's really nice about candlestick charting, is if you use it properly, and that's a key, using it properly. This has been around for hundreds of years out here, but here's the key. I was listening to a show, during doing some driving here. I like to listen to a lot of the talk. Obviously, being on talk radio, you kind of you listen to talk radio, and as well as music. And so I was listening to NPR, and they did a segment on language. I need to go back and replay it. It was part of the TED Hour out there, and I think they got a lot of great 18-minute segments out there, and was talking about language, talking about the mere fact that there's like 8,000 languages in the world today. Did you realize that? 8,000. We're losing like 30 a week, 30 a month, 30 a day, 30 a year, something like that. Hey, this is a language here, candlestick charting. But you've got to use the language properly out here. Well, we do know the bears are camped out right here at the top of this consolidation level. You can see that they've been able to turn back the bulls for how long, we'll say. The Euro-Japanese yen is saying not so fast, though. 877-927-6648. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. and Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
To the races. We got the Dow trading down 100 points, trading out at 16,413. S&P off about 12.5 trading out at 1868 and change. Nasdaq Composite off 34 points, trading out at 4,089. Russell 2000 down 1%, trading down 11 points. She's trading out at 1116. To the upside, leading the charge, we've got BE Aerospace. They manufacture, sell, service cabin interior products for the commercial aircraft business. They're up a nice 10%. The BEAV is on the move. BEAV is the ticker symbol. We've got a volcano that's exploding here this morning. Volcano Corporation, VOLC, up 6.5%, up $1.07 right now. GWPH, GW Pharmaceuticals, up 1%. Nordion, NDZ is the ticker symbol, up 6% here. SanDisk up 0.5%, trading out at 86.11, up 50 cents. King Digital Entertainment, KING is the ticker symbol. It's up 2 7/10%, up 50 cents. Caesars Entertainment, CZR, that's up 37 cents. Leading the charge to the downside, we've got Broadsoft Inc., BSFT, up 20% this morning. Yikes. That is, let's see, they're out with numbers. Their numbers go like this. Total revenue, $43.9 million. That's up 11% from the prior year, which did $39.6 million. So they beat the top line out here for their first quarter. They went ahead and produced a loss, so their loss was widening. So they've got a little expense problem of sorts. They generated a $7.5 million loss versus $2.3 million from the prior year. Broadsoft trading down 21%. We'll check in on that. Wynn Resorts here off 2% this morning, down $4.60. I don't see any earnings or anything behind that. Realogy is headed to the downside here this morning. I don't see the numbers on them. They're trading down 10%, off $4 and change. Goldman Sachs, GS, is the ticker symbol, down 2%, off $3.60. Netflix is down $2.30. Tyson Foods, TSN, the producers of chicken, well, and other things out here, down 7% this morning, off $3.26. Las Vegas Sands, LVS, down 3% this morning. Amazon down $1.45. So let's go check in on some of these equities. Well, I said I would take a look at gold and silver, so I am a man of my word. So let's go check into Goldilocks and silver out here. So you can see, again, back to the Euro-Japanese yen, hasn't budged to the downside. So I think that this sell-off here is maybe a little bit overplayed, but no reversal signal as of yet. However, if we take a look at Goldilocks and silver, well, as I was away, as I was away on Friday. That's I'm just going to stop it right there. What did we see on Friday? Like, I don't care whether it was Ukraine or not. What Goldilocks did was gold broke through that descending trend line out here, and it did it with a nice wide-ranging, but really a couple things taking place. You had a key reversal session in one sense. We've seen a couple of them. Now, does it really qualify as a true key reversal session? Probably not. Bullish engulfing? Absolutely yes. And so, and we had those same types of sessions back here on February 24th. As Goldilocks was making low on April 1st, had a nice big bull sash, bullish engulfing candle on April the 2nd out here. This is a very important low. This April 1st area, so 1277. So what is it that we know about gold? What we know about gold is it has broken through that descending trend line. What else do we know about gold? If we take a look at retracements off of December 31st up to the high that was put in on that key reversal session. Now, that was an absolute key reversal session on March the 17th, down around the 0.618 retracement level. Didn't exactly hit the number on the head. 1262 would have been the number. The low that came in on April 24th was 1268. Close enough for us. It was a test of a swing point. Out there, we saw reversal sign. So at this stage here, and we've seen that. So the reason why that is such a key level is because trying to identify where bulls and bears are hanging out. Well, in the case of Goldilocks, it doesn't get any simpler than this. The bulls are truly trying to defend the position at 1277.40. The bulls believe that is a nice place to be buying gold at. Now, where's resistance? Where's price moved up to as it's broken the trend line? Really, in essence, where it should, or very, very close to where it should, which is the swing point, which is the April 14th swing point. The low there is 1318. Have not hit that here just yet. I suspect that is where gold is going to at least hit. Now, it's going to also run into the 200-day exponential moving average. That is at 1323. So far, intra-session high, 1315. But what we do know about gold is it has formed a nice little bottom out here. It has broken a trend line. That, to me, looks relatively bullish. We'll see how gold is able to handle. Of course, the real break of gold was all the way back here, back in, truly in February when it broke the larger descending price channel and trend lines out here. So we'll see what gold can do as it gets up into this resistance area right about that 1315 mark. Let's go check in on silver. Let's go see what Hi-Ho Silver did here. It also broke through its trend line. And remember, silver been the laggard out here. So silver here had a trend line. Now, its trend line that we're taking a look at coming off of the high from March 14th and then using, in essence, as the next touch point, the high from April the 10th. On Friday's session, slightly broke through. This morning, what it's really trying to do is give you a real reversal signal, and that would be getting out of, well, really, you got really two swing points you'd like to see silver, in essence, get out of. Number one, though, is that June 28th area, and that's at at $19.63, because when you trade into a swing point, you never know if price wants to go take a trip and visit the low of that swing point. Is always a possibility, and that is out at $18.18 out here. Of course, we've got this swing point that has recently been tested from December 31st, the high of which is 1982. That's a little bit larger of a bar, but one step at a time. We can see here that silver has broken through its trend line. What you want to see today is some conviction to the upside, at least a continued push higher in the market. That's what's going on there. Let's go take a look at light sweet crude, then we'll take a look at some of these equities here that are popping and dropping. Light sweet crude here, we know light sweet crude in essence has almost completed the 1 to 1A to B equals CD to the downside. The A point out here was the April 16th high. 104.10 was the number. The B point was the swing from April the 28th. That was at the bottom of this nice rising price channel that it broke through. That low, the swing point on April 28th, that's at 100.33. Not much of a retracement out here. One session retracement, an intraday session retracement more likely. That was on April 29th as we saw light sweet crude bounce up to 102.20. Broke the trend line. You know, an ideal potential trade out here. Friday created a nice little bullish engulfing candle. No follow through today, so that is more bearish than anything else. Of course, you'd like to see light sweet crude come back and try to test the bottom of this rising price channel, reject that area. That could be a spot to look at getting in on a short position inside of that light sweet crude Texas T out there. Right now, it's trading out at 99.57. Let's go take a look at a couple of these stocks here that are popping to the downside. Hey, now this has been a strong stock. I remember T-Rex. It was Trex Company is the ticker symbol, but I like T-Rex, T-R-E-X. Now, as I recall, this thing was strong stock here. Let's pull this back. Oh, yeah. Number of strong sessions inside T-Rex. Let me see. What does T-Rex do? I don't remember off the top of my head. While we let that load, what it is doing here this morning, let me see. It looks like they're out with numbers. So their first quarter sales, they did net sales, $100.6 million versus $107 million. So down just slightly out here. Not necessarily a good thing. That's for their first quarter. I don't see what the net income is. Nonetheless, these are, a retail store maybe? What are these? Now, they manufacture, they distribute wood, plastic composite products, related accessories for residential, commercial decking, and so forth. Okay, so if we take a look at this stock chart, I mean, this thing has got some pretty decent signs of, it's got a number of high-volume bars out here. That's the first place to start. But if you take a look at a breakout session, there's no question there's one that occurred on October 25th, 2013, 992,000 shares. Looks like that may be an area where it is trading back into, which is right around the 68.72 mark. The reason I'll put a line across the screen out here for us. Let's pay attention to this. Why do I pick that out? Well, one of the reasons I picked that out is because this also had another breakaway session, another breakout session, February 24th out there, 1.4 million shares to the upside. And price came back and, in essence, tested really two levels. It tested the actual breakout, which was from February 21st, February 22nd out there. Again, the benchmark is 1.4 million shares. 287,000 shares is what it did on the prior breakout session day. Well, on March 26th, when it came back, it was coming back with 232,000 shares. That's how you like to see a test being done out here inside of a equity. And then it's gone ahead. What did it do? It took off top side again. Got back up to the swing point high. But this morning here, down with some volume behind the move, 119,000 shares. Is it volume off the top? Won't really know until we see the end of the trading session today. But this thing may be setting up a pretty decent buy right around here, which is right around the $68.72 area. It just needs to come back on lighter volume. Now, what's your benchmark that you look for as the price comes back in that area? Ideally, it would be less than 189,000 shares. You'd want to use that March 27th area to be focused on and paying attention to. Test of 67.17 to 69.43 on less than 189,000 shares, and that would be nice and bullish, coming back to a breakout area. Had some pretty decent volume in the trading session here, although a doji candle, not really a big deal, other than it's up at a resistance level. But nonetheless, pretty decent volume. Now, decent volume for this equity on Friday. That was 513,000 shares out there. Let's take a look at Broadsoft, down 20% out here this morning. I'm assuming there's going to be some volume behind this move out here. BSFT is the ticker symbol. Let's go see where this is trading down to. Let's clear the decks out here. Let's clear the chart. Let's go see what we see. So we start with a brand new clean chart out here. This thing is trading down below this, man. This thing has had some. So unlike T-Rex, where we took a look at institutional buying, you can just flip this chart around. Instead, what it's having is institutional selling. And it's been a nothing but a barrage of selling inside of Broadsoft ever since the trading session back here in November of 2012. Boy, that's a lot of time worth of selling that's going on. They first unloaded back here. Well, the first unload actually took place right back here on May 8, 2012. 1.7 million shares, wide-ranging gap to the downside. We saw that occur again back in November of 2012. We saw this occur another time here in March of 2013. We saw it more recently take place in November of 2013, and then voila, again today. So Broadsoft, let's put this on a weekly chart. Man, this is a pretty nasty-looking stock chart out here. Why do I say that? Look at you've got to go all the way to November of 2010 to find anyone that is in a profit position inside of this equity out here. Whew. That's a true picture of nastiness out here. What a nasty looking stock chart. That is on a Broadsoft BSFT. Hope nobody out there is a holder of that equity. Let's take a look at, let's see what else we got. We'll take a look at some things to the upside here in a moment. But let's look at Realogy, RLGY being the ticker symbol. Let's go see what that is doing. Down with volume today. Let's go see where Realogy is really trading into out here. Man, taking out a swing point. This thing here, this is not a whole lot better from the standpoint of how many shareholders may be in the money. IPO day, October 11, 2012. Looks like that's where it's headed to, maybe, and then some out here. Volume back on that day, well, of course, you really trying to benchmark the volume on the IPO day. That's a tough one out here. Nonetheless, price level, though, I'd have to say the 32.50, 34.90 area, it's trading at 37.74, is very likely its target. Now, what it's done here today, it's taken out a B point. This is a daily chart we're looking at. That's the B point of an A to B equals CD to the downside. That low is 39.58 out here. You're at 37.71. If we take a look at it here, your A point happens to be the key reversal, bearish engulfing, big old bearish engulfing session on May 22nd, 2013. That high, 55.28. The B point down here on November the 1st. Again, this is Realogy. RLGY is the ticker symbol. The low, 39.58, is your B point. 7.1 million shares. Makes a retracement out here on January 2nd, makes its high, 51.35, and is sold off really ever since that time period. Your 1-to-1 takes it down to 35.66 out here. That sets you right back into, or very close to, that IPO day of 34.90. So it looks like that is where Realogy is heading for real. Let's take a look at the BEAV out here. The BEAV lead the charge, the upside. BEAV is the ticker symbol, up 10% this morning here. It's got some nice volume behind its move. Looks like this is a party out here. Looks like everybody in this equity is at the party having fun. Let me put this on a weekly time frame out here. Take a look at it. Yeah, most certainly. So it's at all-time highs on a weekly chart. Man, let's just see here. It looks like for the week it's going to take out the B point. It could. So you got 8.5 million shares. Yeah, that's what I'm going to use. 8.5 million shares. That is at 88.43 is the number. November 29th out there. 8.5 million shares. Today it's already done 1.7 million shares. So if we're only 9 minutes into the trading session out here. So the BEAV out here. Well, here's another A to B equals CD. When we get back from this break, we'll take a look at BE Aerospace. It is headed to the moon here right now. Of course, you want to be paying attention to a $97 stock, because if there is some kind of reversal in the marketplace, this could form an island reversal at all-time highs. Then we take a different look at it, wouldn't we? We'll be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Welcome back, folks. Dow off 90 points. Just going back to the 120-minute chart here. Now, my 120-minute chart here, this ends in 6 minutes. And the candle that's forming at the moment, we got 6 minutes, so a lot of things can happen out here. But you can see we're way off the lows here this morning, a little spike low out here. You actually have a hammer candle that is forming as we speak right now. So if we were to get a close right here at the 35.67 level, you'd have a nice little hammer candle out here. So the news that the sky is falling, that's, look, and I don't know what candle's going to form here. And as I said, as I was, what was so interesting is I was listening to a little TED segment that was talking about languages. And at that stage, we were driving, so I was, even though I had it on, I was trying to listen. I was trying to be present with the other conversation going on in the car, but I was really very interested in this discussion about all of the languages around the world out there. And the reason why is because when I take a look at a stock chart here, it's communicated and it has its own language as well, and it's a language that if you learn how to use it, you can really use it to your advantage. Now, right now we don't have a hammer candle that is formed out here as of yet. So that's why it's important to go ahead and let these things play out there. But you do want to learn the language. Well, if you do want to learn the language of the markets out here, I suggest that one of those things that you put on your topics is truly understanding candlesticks. Now, what I've done, I did it in a workshop. It's about a 6-hour workshop that focuses on this as well as trading strategies, how you actually implement this into your trading strategy. See, you'll see books out there and other people. You'll get emails, from time to time. In fact, there was an email I got over the weekend, just coincidentally, talking about the 6 great candle signals that one needs to know. And I was reading through it, and it was such BS. It was such before Steve. If you take my course out there, then you'd really know the candle signals that you want to focus on out there. So there are folks that use these. There are systems that improperly call candle signals out there. And if you're going to really learn that language, you want to learn it properly. The books that are out there, they teach you and they say, this is this is that, this is a bullish engulfing, this is a hammer, but they don't teach you how to how to trade them, period. They don't teach you how to do that. So, if you're interested in that, go to the homepage at TFNN.com. Click on my name out there, or you can send me an email, steve@TFNN.com. We can talk by phone, talk by email. Happy to have a discussion about what it is that you can learn from this. From these candle signals out there. And, of course, if you have not test drove Mastering Probability, go do that out there. It's a wealth of education, let alone we make money. And that's really what the whole key is. The whole reason to even, I guess, consider taking a look at a newsletter. Not that you shouldn't invest in your mind, because you most certainly should out there. But the bottom line is it pays for itself out there. So go check that out on the homepage at TFNN.com. Out here. Looks like at this stage, we still got a little hammer candle that has formed inside of the NASDAQ. And, of course, all that was really the correlation of what was going on inside the currency pair. I got an email from somebody that said, how could I say that the market wasn't going to fall apart, and you're saying that the move lower is not real out here? And, here's the deal, folks. What I promise that I will deliver to you each and every day is I will call it as I see it, and what I will do is when the market tells me something different, I will change positions. It is really just that simple out here. I have skin in the game with regard to trades, but what I've really got is I've got my mind in the game, and my mind in the game says as the market gives you information, go ahead and change, your strategy, your opinion. Take a look at the Euro-Japanese yen here. You can see that it has rejected, at least at this stage, the bottom of that rising trend channel. Folks, it is a marvelous Monday. Thanks so much for joining me. Have a terrific day, and I look forward to seeing you soon, maybe in about 8 minutes. Take care now.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.